Hello, everyone, and welcome to another installment of Relic Law's Interview with an Expert series. I'm William Orlowitz, Principal Attorney at Relic Law. Today, we have the pleasure of speaking with Ari Dolgen, Senior Account Executive at Gallagher, who will be taking our questions on cyber liability insurance. So before we get started, Ari, can you give us a little background on yourself and Gallagher?
Sure. Will, thanks for having me. It's great to be here. So Gallagher is a global insurance brokerage and risk management and consulting firm. We are the third largest in the world, headquartered right outside of Chicago, Illinois. I am a senior account executive at Gallagher, licensed in all the traditional lines of insurance with a special expertise in cyber insurance and resiliency planning.
Excellent, excellent. Let's start with our first question. So, Ari, can you tell us, what really is cyber liability insurance and why is it important?
Sure. Cyber liability insurance, it's an insurance product designed to help organizations mitigate the damaging impact from a cyber incident. So there's a misconception that cyber insurance is geared towards large corporations and focuses exclusively on data breaches. The reality is that every organization faces some level of exposure and should have a cyber insurance policy as part of their overall resiliency program. According to a recent net diligence cyber claims study, almost half of all reported cyber incidents affect organizations with less than $50 million in revenue. Cyber incidents are not confined by organization size nor by industry. In fact, many attackers will actually specifically target smaller companies as an entry point into the larger organizations they provide service to, taking advantage of the weaker cybersecurity posture of these smaller organizations. And as Chubb notes, 9 out of 10 cyber incidents begin with an email. So if your organization employs human beings and uses email, you are definitely exposed and should have a cyber insurance policy.
Yeah, and I think that's becoming an increasing consensus among businesses, especially as they start to see some of these high-profile, cyber incidents and data breaches affecting other organizations. But I think one of the biggest confusions is what kind of cyber liability insurance do they need? And so our next question deals with the difference between first-party and third-party coverage. Can you give us some insight into what the difference is?
Yes, absolutely. So first-party coverage is aimed at mitigating the financial expenses your organization directly incurs. So an example of first-party coverage would be making a ransomware extortion payment to regain access to your company's database. Then third-party coverage provides protection for your liability to a third party. For example, if a hacker gained access to your network and then spread malware to your vendor system, third-party coverage would provide funds for damages to the vendor system. But cyber policies are not standardized, and so every carrier may have different coverage options, sublimits, exclusions, or requirements of the insured. And it's really, really important to look at the specific terms within your policy to understand, what coverages you're afforded and ensure that you don't have any unintended gap in coverage.
No, and I think that makes a lot of sense. We advise a lot of technology companies, and one of the questions comes up is whether first-party or third-party coverage is appropriate for them. And generally speaking, if they're building, different types of applications that are, susceptible to cyber attacks, then they really need to look at both. And I think you're right about paying attention to the specific policy language in the policy that they're looking at. So I think that's really good advice. So the next question I have for you, Ari, is, what can organizations do to determine their exposure to risk? That's obviously one of the fundamental questions that comes up when they're evaluating whether they should insure against cyber loss. And so do you have any pointers you can offer on that subject?
Yeah, and you're absolutely right. It's a difficult question to answer because there really is no one-size-fits-all response to this. But really, you have to think about organizations face various exposures that have the potential to cause operational disruption as well as financial distress from the liability they may have to a third party, which could include regulatory fines and lawsuits. So it's really critical that organizations take a holistic view of their cyber posture, internal environment, and regulatory landscape in order to determine their true exposure to risk. This may include internal assessments on their IT infrastructure, identifying critical assets, analyzing the type of data flowing through the network, reviewing risk transfer language in contracts, assessing loss prevention strategies, performing tabletop exercises on the incident response plan, working with the data privacy attorney to understand applicable regulations, as well as exploring potential coverage gaps in your current insurance program. And conducting a gap analysis of your current program is one of the most crucial elements in determining your organization's exposure. So as the world has become completely interconnected, we've seen the threat surface for cyber attacks has greatly increased. And with that, there may be new exposures an organization faces from the shift towards digitalization, as traditional policies such as property and general liability were not designed to cover cyber incidents. So a good example of this is if an attacker hacks into a commercial refrigerator and intentionally modifies the temperature sensors, destroying all of the inventory. Well, your traditional property policy likely would not respond to cover the cost of the lost inventory because it was a cyber attack. So instead, if this is a risk that the organization faces, they may want to consider a cyber insurance policy that includes special coverage for property damage. So at Gallagher, we use our Core 360 approach to assessing an organization's total cost of risk, which includes analyzing multiple cost drivers, such as coverage gaps, contractual liability, loss prevention programs, and the potential for uninsured losses. Additionally, we use tools such as benchmarking, data breach cost estimators, and an ongoing assessment of the regulatory environment to gain a better understanding of an organization's true exposure to risk. And by redefining the total cost of risk, we help our clients identify exposures that have the potential to significantly drive future costs and offer strategies to mitigate. Additionally, clients can take advantage of our eRisk Hub with various risk management insights and tools, including modeling calculators, self-assessments, vendor due diligence checklists, as well as sample policies. And all of these combined will help them get a better gauge of their actual exposure to risk and best coverage options to transfer and mitigate that risk.
Yeah, so it seems like there's a lot of tools there for organizations to take advantage of. And really, there's a lot that goes into the formula. When people think of cyber liability insurance, they generally think of, it falling into sort of the recovery category of the post-incident category for, how will they cover their losses. But really, a lot of the work has to be done on the front end of actually evaluating what you're trying to protect and why you're trying to protect it and sort of the extent of your exposure to begin with. And so I think that's an important component when, thinking about cyber liability insurance. It's not something that you're necessarily only looking at for post-incident circumstances. You're looking at it up front as well when you're actually determining what kind of coverage you need and why. So I think that was very helpful.
Yeah, thank you. And to that point, really, the most critical piece of advice I give companies these days is don't think of cyber insurance as this prepackaged commodity where you just transfer your risk and you're okay. That is just one component of your overall resiliency program, which combines elements of how you set up your infrastructure and your security, as well as your culture, which includes proper policies, awareness training. And then your third bucket is your risk transfer, which does include insurance, but also includes contractual liability. So I very much encourage companies to plan ahead, like you said, and then look for the best option that makes sense for them.
Absolutely. And I think this next question really gets to what organizations really are curious about, which is what losses are covered by a claim on a cyber liability policy.
Yeah, and that's a good one. And like I said before, cyber insurance policies are not standardized across carriers, so you're going to find large and small differences across almost every policy. So generally, a cyber insurance policy does provide coverage for a wide range of exposures, but companies with the dedicated cyber insurance policies, or where appropriate, combined cyber and errors and omissions policy, will likely find coverages for a lot of these costs that they will incur from these cyber incidents. And as I said, they're not standardized, so it's very important to read the terms to identify any special sublimits or exclusions or even definitions within your policy that could lead to unintended gaps. So some potential cyber insurance coverages would include, and this again depends on a particular policy's negotiated terms, but they could include crisis management expenses following a data breach. And those bundle of expenses include forensics investigation costs, notification costs, setting up a call center for inbound inquiries, providing ID and credit monitoring for affected individuals, regulatory fines, and even enlisting a PR agency to help bring the organization's reputation back to pre-breach state. Additional coverages may include cyber extortion and ransomware payments, business income loss and extra expense caused by an attack on the network, social engineering expenses for being tricked into paying fraudulent invoices, privacy liability coverage for defense expenses, and in some cases, penalties and fines incurred from a regulatory proceeding resulting from a violation of privacy law caused by a covered cyber incident. And you also have network security liability for claims of negligence resulting in unauthorized access or use of the computer system, including the introduction of malicious code or even a denial of service attack. There's typically coverage for system failure. So if your network or computer system fails due to a non-malicious reason, like human error, there's typically coverage for that, as well as media liability coverage to help cover third-party claims arising from digital wrongful acts, such as copyright infringement or libel and slander. And then the last one that we typically see, and again, this is not on every policy, but we see something called contingent business interruption, and that's meant to cover lost income due to an interruption in service of a shared computer system, which usually refers to an outsourced IT vendor, such as a cloud storage provider. So as I mentioned, cyber policies do vary from carrier to carrier, and there are two important items I want to call out for that you should really be aware of. The first is the definition of confidential information inside the policy. So one policy may define confidential information as personally identifiable information, which is PII, or protected health information, which is PHI, whereas another policy may extend the definition of confidential information to include non-public corporate information. This key difference may end up leaving an organization with an unexpected exposure. And the second one I want to point out is social engineering. That's another very, very important coverage that I do not see on every cyber policy. And so social engineering, it's when an attacker tricks you into willfully divulging information or paying a fraudulent invoice. And that's really important, that they tricked you into willfully, proactively paying this fraudulent invoice or divulging information. And because they didn't forcefully steal from you, rather you were tricked into taking some action under false pretense, your standard crime policy may not provide coverage for those lost funds. So it's really, really important to fully understand the terms specific to each of your policies and whether coverage is afforded, excluded, or contains a sublimit. And the last point I want to call out with regards to losses covered by a claim, and in the cyber context, sometimes your traditional policies or your business owner's policy will include cyber coverage as an endorsement or an add-on, but this is almost always inadequate. So it is not going to be adequate for almost every company out there. I always recommend every company get a standalone cyber insurance policy, as it will be much more comprehensive. And the main exception is for organizations in the technology sector where carriers do tend to require these companies combine their cyber policy along with their professional errors and omissions policy, as it can be a little bit challenging to determine which policies should respond in certain cases.
Yeah, that's really interesting, Ari, and I think it's overall good advice. And what we encounter when counseling clients is that a well-crafted cyber liability insurance policy can be a really great tool to help them sort of mitigate some of the risks that they face. And I think it is important that, as you mentioned, to really look at the specific details of the policy, which is, something we can assist clients with. And I think that, they have to really just know what they're buying into, and that the specific risks that they're, at highest likelihood of encountering are going to be covered by that specific policy, which I guess kind of segues into our next question, which is, how much coverage does an organization really need?
Again, that's an excellent question, and one that many organizations grapple with. The short answer is there's no one-size-fits-all or easy answer when determining your coverage limits. And so every organization needs to carefully analyze its risk tolerance and identify potential vulnerabilities that would be most damaging to that organization. So expenses due to a cyber incident, we know, could add up. And if an organization does not have the adequate limits, then the financial impact can be devastating. So a couple of stats I wanted to point out is in the IBM Ponemon report, the most recent report, they noted that the average total cost of a data breach globally is over $3 million, which is pretty high. But when you think about the US, they noted that the US is the most expensive country with an average cost of $8 million per breach. That is a lot of money. Equally, ransom demands themselves have reached an all-time high. According to Coveware, the Relic variant is now demanding a payment of $780,000, and that's just the ransom payment. And what's even crazier is the more damaging effect than the ransom payment could actually be the ensuing downtime costs that are typically 5 to 10 times the amount of the ransom payment itself. So knowing that and how devastating these cyber incidents can be, we look at the overall, all the different factors that come into play when determining how much coverage an organization needs. So one method used to gauge the potential financial impact of a data breach is to determine the number of records and type of data flowing through your network. A common estimate for the cost of a breached record is $200, which includes expenses such as forensics, sending required notification letters, regulatory fines, brand damage. However, the estimated cost per breach record may vary significantly across industries and organization structures and may not even capture your full exposure. For example, Ponemon's cost of the data breach study cited on average disclosed records in the healthcare industry cost over $400 each. So think about the potential financial impact to a hospital that experiences a breach of 100,000 records. That's $40 million in estimated costs right there. But as I noted before, one of the most financially devastating impacts of a cyber incident oftentimes is the business income loss due to halting or reducing operations. So consider a ransomware attack on a manufacturing organization that grinds production to a halt. The business interruption impact to this organization of being down for, let's say, 10 days may cost millions of dollars in lost income. And when assessing cyber insurance limits, it is critically important to consider the financial impact from a multitude of cyber risks and align the appropriate coverages with your risk tolerance. At Gallagher, as I mentioned before, we use our Core 360 approach to identify an organization's total cost of risk and assess the appropriate coverage limits. Our analysis is based on multiple cost drivers, including program structure, coverage gaps, loss prevention strategies, and contractual liability. We utilize benchmarking tools, assess the regulatory environment, and analyze a wide range of cyber incidents to create a holistic picture of the exposures and potential cost implications in order to more clearly define the appropriate cyber insurance limits.
Yeah, and I would tend to agree that clients generally underestimate the impact and the cost associated with having a cybersecurity incident, in representing clients that have been affected by ransomware or brute force attacks, either when, their information technology systems are completely shut down and they're unable to operate, they're unable to service customers, they're unable to even access payroll systems and things of that nature. The costs add up very quickly, and then obviously the cost of remediating those issues by bringing in, the technical professionals and of course legal counsel to help advise them they underestimate how involved each one of those services is, and how expensive their potential downtime can be. And I think that's why it's important to have these conversations about those exposures up front before something happens.
Exactly.
Obviously, after something happens, it's too late to start thinking about what your costs are going to be. You pretty much have to just start paying. So let me ask you a little bit about the mechanics of cyber liability policies. And, people would like to know what factors go into underwriting a new cyber liability policy.
Yeah, and so there are a lot of different factors that go into underwriting a new cyber policy, and they could include the industry, the type of data being processed, controls in place for the transfer of funds, backup processes and patch frequency, vendor management, incident response planning, user controls, the jurisdiction you're operating in, and employee training. So right now, unlike the other traditional industries like property or general liability, there's not yet enough actuarial data to determine the exact correlation between risk controls and the ultimate cyber claim cost. However, the underwriters are combining multiple pieces of information regarding your cyber posture and then attributing an insurance premium to align with that risk. Given the current environment, it is incredibly important to work with an experienced broker to help identify some of these cyber exposures and present what we call a narrative to the underwriter that clearly conveys your continued focus on cybersecurity improvements. Right now, there is a large amount of capacity in the market, so cyber premiums are relatively low, but it is my personal opinion that as the world continues to become interconnected and more digitalized, we will see an increase in cyber insurance premiums, likely some sublimits to go along with that, as well as more clearly defined exclusions within your non-cyber policies so that there is no gray area with regards to what each policy covers.
Yeah, I think we're certainly going to see this particular insurance product mature, and probably underwriting and costs associated with policies more closely tied to the actual organization's information security practices. And that's something that, assuming that it goes that way, it behooves an organization to sort of think about that up front and maybe make some of the changes that would help them, get a better policy or at least a more affordable policy down the road, even if not today. So I think that perspective is valuable to consider. All right, last question for you today. What happens when a claim is made following a cybersecurity incident? That's really, I think, gets to the heart of how this policy is really going to benefit the organization.
Yeah, and I think to that point, I think there is confusion with what an insured should do after a cyber incident. So immediately following a cybersecurity incident, your first point of contact should be the data privacy attorney, which is often referred to as a breach coach. And depending on your policy, you may be able to select your own incident response vendors, or you will be restricted to using the carrier's panel of pre-approved vendors. So let's consider what happens following a ransomware attack, and let's use a cyber insurance policy that includes ransomware and business income loss coverage. So the insured will first contact the breach coach, who will direct the investigation under attorney-client privilege, which is incredibly important, and determine if the organization has any obligations beyond the forensics investigation that may be warranted, such as notifying regulators or affected individuals. The forensics team will then investigate what happened, how it happened, what information was potentially accessed, and whether the attacker is still present in the system. Based on these results of the investigation, if the organization is required to notify various individuals and entities, the data privacy attorney will then draft the letters of notification to comply with the regulatory requirements and act as a representative for any ensuing regulatory inquiries. A PR firm may also be engaged at this point to ensure that the organization is portrayed in the best light possible within the notification letters and then ultimately in the media. The carrier will work with the forensics team and the insured to determine whether a ransom payment should be made, or they will attempt to restore from the backups. Some considerations include the amount of the ransom demand, the quality of the backups in your organization, and the likelihood that the hacker will provide a working decryption key. The carriers do engage negotiators that have experience driving down the ransom demand, and also they retain Bitcoin in accessible accounts as needed. Coveware's 2019 ransomware marketplace report noted that victims who pay ransom actually recover over 90% of their data. That's a pretty good hit rate. Cyber criminals do operate these as businesses, and hackers know that if they end up not providing a decryption key after an organization paid them a ransom, victims would just stop paying. So that's a little thought from their side of things. And so if the organization did suffer any kind of business income loss due to the cyber incident, the policy would provide some relief. Many cyber policies provide coverage to restore or replace computer systems to the same standard as before the breach event. But to me, it's actually pretty interesting to note that some policies go one step further and provide funds for improving the network beyond the pre-breach state, citing the fact that the pre-breach state was not sufficient to thwart a cyber attack. And in the end, really a more secure infrastructure should drive down costs for both the insured as well as the carrier. And Will, as you mentioned before, planning is key. And so in addition to some of the post-breach remediation services, cyber policies do often provide pre-incident services to help the insured plan and mitigate exposure. Some of these may include cyber risk assessments, employee training, internal policy templates, and even assistance in developing an incident response plan. I do encourage organizations to take advantage of these services, as they're typically substantive and do provide some strong guidance to reduce your exposure.
Yeah, absolutely. And I think that a good recommendation is for a company to take advantage of that as well. Certainly what you do on the pre-incident side is going to help you on the post-incident side. And I think you've done a great job of highlighting sort of the multidisciplinary nature of both sort of the pre-incident work that needs to be done to help a company sort of limit its exposure. And then also on the post-incident side, where you have a team of sort of cross-functional professionals, everyone from legal counsel to crisis communications to your digital forensics and incident response team who are engaged in assisting in addressing these incidents. So I think that's some great information for people to take away, Ari. And so I think this, yeah, absolutely. And I think that this presentation will be really helpful to give people some perspective on sort of the mystique that cyber liability insurance still sort of carries. And so again, we thank you for your time today. And for those of you who have joined us, you can learn more about Relic Law's multidisciplinary data privacy and cybersecurity practice at reliclawpllc.com and about Gallagher at ajg.com. Thank you very much. We'll see you next time.
Thank you.